Okay, thank you everyone for offering up a portion of your lunch to listen to a topic that is a little bit vague at this point in time, what it is to come, what does it look like, and how do we get ready for it. So today we're just going to have a bit of a practical chat about what is VAT modernization and how accounts receivable automation makes that aspect significantly simpler. So thank you for sacrificing your lunch. For those that are probably eating lunch at the same point in time, kudos to you. I can't do that. It might come across as unprofessional at this stage, so I'll eat later. What we're going to cover today is just a quick welcome and context setting. What is VAT modernization and the proverbial element e-invoicing? Please note this is not just sending an invoice via an email. That's not what it boils down to. The risk of delaying the preparation, what account receivable automation looks like, and then we want to go into a bit of a live Q&A session so that we can ask Mike and Shannon some questions to provide clarity and give you guidance on what to do next. So your speakers today, I'm your NC, Damian Baker. I'm the Executive Head of Cloud Accounting at Outsourced CFO, and we really thought about bringing this topic to everyone today, just to give clarity. So we've got Shannon Friedman here, the CEO of VAT Modernization, and we've got Michael Grobbelaar about AR automation from System A1. So Shannon, just a quick intro. Tell the people who you are.
How's it, Damian? Great to be there. And how's it, everybody on the call? Thanks so much for joining. So we run an organization called VAT Modernisation South Africa. And really what we're all about is helping businesses in South Africa prepare for SARS's upcoming VAT modernization framework. So a lot of it's around just laying the groundwork, helping these businesses lay the foundation within their systems, making sure that they're prepared from a knowledge perspective, and also ultimately ensuring that they have the relevant and required e-invoicing systems in place such that they will be able to report their VAT in line with the VAT modernization framework.
Thank you, Shannon. I heard VAT modernization copious times there, so you'll provide more clarity about that. So, Mike, over to you. AR automation, who are you?
Yeah, great. Thanks, Damian. So I work with System 1A. I'm head of partnerships. And yeah, I've worked in financial communications and technology for about 25 years. And I just love to help companies with better customer experience, better communication, and very importantly, and topical, cash flow, increasing cash flow. So System 1A works with companies across industry, and we help them automate their debtors management and drive increased cash flow and visibility in the business. So yeah, very excited to be here, and thanks for having us.
Oh, thanks, Mike. So pretty much just getting money in quicker and making it simpler.
Yeah.
Why is this conversation important today? So the finance world is moving closer to real-time connected and automated processes. I'm sure most of you would have already realized the rate at change that is currently happening in the finance world. Compliance, readiness matters. So understanding what is happening with the SARS VAT modernization, we are but lagging behind other African countries, even when it comes to the e-invoicing aspect. And the operational efficiency, as Mike alluded to, reducing manual work. I hope no one on the call is still doing handwritten invoicing. If not, we need to have a chat about that. And cash flow visibility. The quicker and more automated we have things, the quicker you have visibility on what is happening in your organization, and it leads into more positive cash flow views. So let's kick off with the VAT modernization. So Shannon, I've got a few questions posed for you. Pretty much what is it? What does it look like? And a bit of explanations on it. So to kick off, what is VAT modernization and why is SARS looking to roll this out over the next 5 years? I know it's a very topical thing at this point in time. So kick us off on this, please.
So Damian, I think you actually already touched on this a bit already. That this is something that's happening globally. It's happening within Africa, it's happening within Europe. And VAT modernization really is just the term that SARS has decided to name this. Really what it's all about, it's about updating the way businesses are reporting VAT to their tax authorities and making it in such a way that it becomes more efficient, more automated, more accurate, more real time and more transparent. And ultimately, with the whole goal of that, when it becomes more transparent, that's going to help to increase collections. That's going to help to have SARS have greater oversight of what's going on within the supply chain. And in terms of what that actually looks like in practice, what it looks like is we're going to be moving very soon away from the idea of where you've got your tax team or your finance team that every month or every 2 months, they prepare this VAT return, the summary VAT return, comes tax season, and they submit it to SARS. What VAT modernization really looks like is that every time your business raises an invoice, that underlying data is automatically reported to SARS on a near real-time basis. And that's made possible by technology such as e-invoicing. That's actually, SARS always has a real-time view of what every business's VAT liability looks like. But at the same time, tax teams no longer have this VAT season where they've got to prepare this return and there's this whole rush and everything. It's rather a process that moves more so to the background and it's all happening automatically.
Oh, Shannon, it's an exciting period as well. And I know from other African territories, it even gets to the point that as your customers pay, their tax authorities collect the VAT portion from that aspect. We're not there yet from a South African point, but it is exciting where we're going. So let me just ask this basic question. What does e-invoicing actually mean? It's not sending an invoice via your email.
No, and listen, the confusion around it is very understandable because e-invoicing, it's short for electronic invoicing. And what does that, really mean? All right. If we go into what the actual definition of what e-invoicing is, yes, it's an electronic invoice, but the other requirement is that it's going to be in a structure that can be automatically processed by a machine or a computer. And in order for that to be in that structure, it has to be in a data-based format, okay? So a data file. So that could be something like an XML, that could be like something like a CSV. And how that differs from like your traditional invoice, let's say your PDF, yes, it's digital, it's on email. But at the same time, what happens is when customers receive that invoice, they still have to, a human still has to look at that invoice. They still have to enter that within their ERP or their accounting systems. And so there's still a lot of manual human intervention there. Whereas when it's all basically in data format, well, then machines can all process that all automatically. So yes, on the SARS side, they can process your VAT transactions, calculate your VAT liability in real time. At the same time, businesses, it's got a huge efficiency benefits for business as well. So like let's say when your customers receive your e-invoices, they can automatically get populated within their accounting systems, their AP systems, what have you, and not have that manual data capture function that you still traditionally often have.
Shannon, thanks for this. And I think this also kind of explains what the difference is now between a modern invoice and what it would look like going forward. Just from an accounting side as well, it is deeply exciting how it can get business owners to work more effectively. If I look at the territories, for example, New Zealand, Australia, and even some of the UK areas now, it comes in automatically from the accounting system. You can then actually even pay your invoices, which is deeply exciting for what is still to come. I'm really keen to see what is going to happen. So obviously now let's look at it. What do we need to do to prepare for this? So everyone on here most likely is from a finance side, they run their own business. What should they start thinking about? And I think the big aspect is, what's going to happen if I don't do this? So what are the risks for an organization that delays preparing for this?
Look, I think with these types of things, the developments at first come quite slowly, but then they come quite quickly. And then all of a sudden, businesses are expected to have certain processes and systems in place. And it kind of sometimes often comes out of nowhere. So to avoid that, and that's what we try to do with our clients, is to help them prepare to lay the foundations to essentially avoid that, so that they're not scrambling at the last minute. Because what ultimately happens with those types of things, this e-invoicing is going to represent a change in how businesses do things. A lot of businesses are going to have to adopt some sort of e-invoicing system that integrates with their ERP, that prepares the invoices in such a way that SARS accepts them, that the format, all those, like, I guess, technical data things. Those things take time to implement. Those things take time to test. And at the same time, you need to make sure that your foundations, whether it's your master data, the controls you have in place for issuing an invoice, that those are all in place and all robust, that they're going to support a smooth transition towards e-invoicing. Unfortunately, what happens a lot of the times, and we've seen it happen a lot in Africa, where, as you mentioned, they already have equivalent frameworks to VAT modernization already in place, where they're, even though it's already live, they're still trying to play catch up over here. And, you know, they're getting non-compliance fees. They're under the stress that they're currently non-compliant and have to implement something quickly. Often we know when we do things under a rush, do things under pressure, you don't necessarily get the best, most cost-effective solution in place. So that's really why businesses should avoid delaying preparing. I think it is important to say at the same time, the full technical specifications for VAT modernization, in other words, the full end-to-end blueprint of what SARS wants, et cetera, that currently hasn't been fully published. So the idea of implementing an end-to-end solution that's fully prepared, you know, there is probably still some sort of wait and see aspect. But at the same time, in terms of that, laying the foundations, laying the groundwork, your data and your master data especially have to be very robust, because the thing is everything's now automated. It's no longer, I raise an invoice, oh, I left out the VAT number, oh, okay, it comes month end, I can quickly put the VAT number back on there, or I can quickly just change things at the end, or because it's all getting aggregated, I can all smooth it out. You know, when everything's getting reported in real time and on that granular level, you're exposed. And therefore, it's so important that to ensure your master data has all been updated correctly, all your customer information's all there, it's all complete. You have the right controls and checks in place for raising an invoice, not that things get raised by mistake and then that kind of stay there. And, you know, obviously mistakes happen and those things you got to deal with, but to have as much control as possible that, you know, it allows for this automated sending of invoices where you're not going to have all these problems to deal with comes, I guess, the VAT return period or the calculation of your VAT or what have you.
Thanks, Shannon. Like, I've dealt with some of the African clients as well. It's been poorly implemented and there was utter chaos. It's actually created more administration than it solves problems. And we'll see what has to come. So I think from a finance leader perspective, what are the 3 things that they need to do to focus on if they want to start considering the e-invoicing solution? So that your 3 top tips.
Sure. So I think we've covered a bit, but a lot of it does start at looking internally at your own systems already. All right. So ideally, when we make this transition, we don't want for our customers that they're going to have to, you know, change all their systems, do this huge overhaul, all these crazy workarounds or anything like that. But in order to minimize that as much as possible, things like checking all your master data is complete. I would say even just monitoring what's going on within your own invoicing processes. You know, how often is it that you send out invoices where there's information missing, or you've got to change something mid-month quickly, and you know those manual checks, they kind of work and it's a nice quick dirty change for now, but those things are going to come through the woodworks when you've got e-invoicing in place. So yeah, I think the one other thing that's probably good to focus on is actually looking at what your options are for e-invoicing solutions. So there are certain South African partners, and I know System 1A is one of them. They've got their own e-invoicing solution as well, where they're committed to supporting VAT modernization and compliance with that. And you look into getting you up and started. And obviously they've committed to that when SARS does release the technical framework, that they're going to make sure that everything's in place and compliant with that.
No, thanks, Shannon. I think this is now where it beautifully segues into what Mike wants to chat about. But it's important to realize that what you want to implement on this side needs to cause less complication in your day-to-day. You can't have your accounting system one side, your e-invoicing system on the one side, and you still have to manually update everything. That's also less than ideal. So I think that is also something that's key from my observations is look at solutions that solve a problem, not create more admin. So Mike, let's now go over to you, like accounts receivable, the automation aspect of it. What is accounts receivable automation? And let's maybe just jump off with the first question. What actually is an accounts receivable automation platform?
Yeah, perfect. Thanks, Damian. So simply put, I mean, you guys know it well, but accounts receivable is the money that your customers owe you. So an accounts receivable automation platform is software, so it's a technology layer that optimizes debtors management on a centralized platform with the goal of increasing cash flow, enhancing visibility, and improving communication with your customers. It's generally any company that has debtors who could use the automation platform. And architecturally speaking, the platform sits as a layer between your ERP and the customer. You could never let a customer into your ERP. So this is an area that both the company and the customer can log into, and it seamlessly integrates with most major ERPs and get this in less than an hour. So it's not a long drawn out process. You don't have to replace any of your existing systems. It's complementary and really quick to implement and get going.
So Mike, a bit of an off question here. If your accounting system can't integrate with any of these solutions, this is a bit of a question mark on how your finance operation is currently operating.
Correct. So as I mentioned, we integrate with most major ERPs. You get your edge cases. In that case, we can still accommodate where data is passed in a specific format. We can still work with that.
Okay. Mike, thanks. So I think the next two questions is pretty much why should finance leaders actually care about this? And what advice would you give people that are still relying on spreadsheets and old accounting systems that just aren't automating and aren't having the ability to integrate?
Perfect. Yeah, so the first one, I think, generally speaking, leaders want to increase cash flow and save time, but without increasing headcount is what we're seeing in the market today. So the platform uses automation to send invoices, statements, credit notes, supporting documents, reminders, etc., so that the team doesn't have to do this work manually. And we see that, even some of your large entities out there are doing a lot of this manually. So for a business, that means much less time on admin, reduced errors, and better business continuity when you're using an AR platform. Plus the result of faster payments into your bank account. You know the saying, revenue is vanity, profit is sanity, but cash is reality, and that's where we are today. Moving on to your second question there. So, yeah, some people are really in a manual phase, and we engage with these types of companies daily, like I said, from small to listed entities, where there's a lot of AR manual processing going on, from sending information, invoicing, following up on late payments, digging out supporting documents, customers asking for recons. All of this is very manual. So, and then when it comes to month end, there's a lot of manual reporting, stitching together different reports from different siloed databases and data stores. So, and that's usually lagging information as well. So the platform, an AR platform, handles a lot of this automatically, and it keeps all information in one central point in near real time as well. So it's a game changer for finance teams, management, and customers alike.
Now, Mike, this is always what I want to encourage as well. You want to be able to quickly log in on a platform and know who owes you money at any point in time. You don't want to pick up the phone and ask a team member to give you an update as to what is happening. So
Correct.
it gives you better decision making and it leads to cash flow.
100%.
Now, Mike, thank you for this. I think from a VAT readiness and a cash flow impact aspect, connecting an automated day-to-day finance aspect. So let's cover that a little bit. How is that AR automation part of VAT modernization and the e-invoicing conversation? I know Shannon has addressed a few things of this, but maybe just give a bit more detail as to what does it look like?
Sure. Yeah, Shannon covered some of it, but absolutely, this is part of the same conversation. So governments are pushing business towards digital invoicing for VAT compliance. So one needs to work with and have access to the raw data that Shannon mentioned. So raw structured data in order to transact with e-invoicing platforms. But what we see is a double win coming out. If companies move this way now and they move early, where companies use an AR platform, they get immediate measurable results in the business, talking about cash flow, better visibility, etc., reduced DSO as well, but also position themselves to be e-invoicing compliant. So it's very important to move in that direction. And as Shannon said, start evaluating where you are now so that you can plot a path going forward.
No, Mike, thanks for this. I think, what would this look like with a finance team using System 1A, and what is the simplest reason for a finance leader to look at this now?
Sure. So instead of sending those manual statements and chasing everything manually, the system does it on a schedule, and we bring in a lot of automation there. So typically speaking, a team would log in, they'd see exactly, to your point earlier, who owes what, their real-time cash forecast, there's tracking of customer engagements and activity, so customers can actually engage on the platform with the business, which is really great. And then also automated follow-ups to avoid those manual, emails, WhatsApps, and phone calls. So in short, this results in loads of time saved, measurable reductions in your DSO, better visibility across the data spectrum there. And I think very importantly, leadership as well have access to a host of reports that highlight the risks and trends in real time in their business. And this translates into a proactive approach in managing and serving your debtors.
No, Mike, thank you. It's just giving you the power to make informed decisions and act upon it as quickly as you can. And I think that's what needs to be achieved from this.
Yeah.
I think let's move on to a bit of a Q&A. So Shannon and Mike, thank you for just sharing a bit of this. Obviously, this is a topic that we can speak for days on end, but I just want to open up. Is there any specific questions that anyone has for either Shannon or Mike? Martin. If you are talking, Martin, you're just muted.
Hi, can everybody hear me?
Loud and clear.
Perfect. Thank you guys for this. I think it's really helpful. I have two questions. The second one is a bit of a integrated question. The first question, Damian, is more directed to you. Considering you've been at the Zero Roadshow, I don't know if this is now a conflict of interest, but do you know, Damian, if Zero is ready for this, or are they working on a solution on this?
Martin,
Yes.
the short answer that I can give you is any accounting software provider in the country are all actively looking at this, because it's going to cause a point that the viability of their product will be under question. So I guarantee you everyone is looking at it at this point in time.
Perfect. Makes sense. Thank you for that. Then the second question, which is the integrated question. So I understand if you as a business now issue a customer invoice, it will be e-invoiced, data sent in real time to SARS. Shannon touched briefly on the other side. Okay. As a supplier, right, to that customer, or like the other way around, if I now get an invoice from somebody, how do I process it in my books, right? If I now get an invoice, firstly, will that be integrated into the system directly from there to me? So that's the first part of the question. The other question is, I'm not sure if that's still SARS's plan, but the earlier draft versions indicated that they will start with bigger firms, multi-million firms, and then filter down to the smaller firms, the implementation process. So if it's a phased-in implementation process, going to my first part of the question, how will that then work if it's a phased-in process that I then integrate the supplier invoice I receive on my end?
Shannon?
How's it, Martin? Thanks so much for the question. So I think just with regards to maybe your second question first, it is true that most likely they will start off with a phased rollout. So you are going to get to firstly at the stage where for every supplier, there's not necessarily a customer who's e-invoicing. So you will have a stage where perhaps, look, and the ability to, I think also important to note is the ability to accept e-invoices. Under certain countries' laws, it's a requirement that you have to be able to accept an e-invoice in the data format and process it automatically. Under certain regimes, it's not. So that's not necessarily going to be part of the compliance side of things, but more so that you have the ability that when you're sending out your e-invoices, you might accompany it with a PDF as well when the client is not in the position to be able to accept an e-invoice, but the data will still go to SARS. At the same time, though, when you do have a case where it's all rolled out to everyone, or perhaps even some of your major suppliers have taken up e-invoicing because they had to, or because they see other important benefits and they're starting early. On your side, from a perspective of receiving those e-invoices, it can be super beneficial from an automation perspective. So just in terms of how that would work is obviously the invoices would come in specified data format. You can just write a script, or your ERP consultant or whoever your consultant is will likely be able to have a script that converts that XML into a data format that can be ingested by Xero or ingested by your accounting system, and therefore gets posted back into Xero. So it's definitely possible.
Perfect. Thank you so much.
Thanks, Martin. Any other questions? There's a few people on the call that I know, so I can ask. Mandy, I saw your hand there.
No, I'm waving goodbye. Sorry to
Bye, Mandy.
Cheers.
That's our 5-minute call, I'm just saying, everyone. So we've got 5 minutes left. Any other questions? UAs, I see that you're here as well. Any questions?
Just a thought, I guess. I noticed that the UAE's already implemented e-invoicing, and they've started with like companies with a 50 million turnover first, and then they're scaling it down slowly. Do you foresee it being something similar, or do you foresee them implementing it in a different way?
How's it, UA? Just for clarification on your question, are you saying, do I see it in a different way with regards to starting with larger businesses and moving down, or something else?
Yes, and like from a turnover point of view, just because I suppose if those of us dealing with smaller businesses might be less worried, those of us dealing with bigger businesses are like, okay, we need to get on a roll right now.
No, sure. So yes, it probably still is going to be on a rolled out basis, where they're going to obviously have certain categories of what's a large business, and then what's a smaller business. So yes, I think you are going to have the situation where there is going to be a rollout amongst your larger businesses. Your Deloitte and your PwCs and all of that are going to have to get involved with helping them as well. And then I guess as you go down the line, smaller businesses, I suppose, are going to have to also come onto the system as well. Look, I think at the end of the day, it depends on, how long they decide to roll out those phases or the gaps between those phases. And I think also what's important to also take note is time can move very quickly ahead of us. But I think from what an advantage is from like a smaller business's perspective is the learnings from the rollout from those larger businesses, mid-sized businesses, and everything is going to come out the woodwork. And hopefully that means when we're hitting like SMEs and businesses like that with maybe less resources, not maybe a dedicated tax team, etc., they already have those learnings to help them implement it in a more seamless and risk-free way.
Thank you.
Thanks, you guys.
I have a question for Damian, if you don't mind.
I go for it.
Do you see there being any benefits or drawbacks? So there will be some larger businesses with one big ERP system, and there will be some maybe also small or slightly smaller businesses with different systems that join together. An inventory system connected to a accounting system. Will there be any drawbacks to that, or do you expect it to be the same throughout?
It's difficult to say at this point in time. There may be some drawbacks to it, but I think overall there would be a benefit from it having a more integrated environment to work on, streamlining operations, getting more efficiency. The world is changing rapidly. We haven't even touched the whole AI aspect, what that's going to come into play here. Just imagine that AI is going to analyze this information going forward. So accuracy is king when it comes to this. And from an e-invoicing aspect, just a high-level comment on this, it's going to force people to do accounting the right way. You can't just generate an invoice and then go back and edit the invoice. Generate the invoice. That thing is closed, finalized. It's final. To correct that, what would have to happen is you have to credit note it. So it's going to force people to do accounting more accurately. It's music to my ears as an accountant. So I think it is ultimately going to result in better accuracy and better transparency.
Excellent.
Thanks. If there's no other questions, we can bring it to an end. So thanks to everyone that listened today. The recording would be available for those that did come in a bit later. And thank you for offering up your lunch. And contact information, you can take a screenshot of if you want information from Shannon or Mike as well, but we would send out some communication about this. Thank you for your time.
Thanks, everyone.
Thanks, everybody.